Warren East is with us. Mr. East, a very good morning to you. Everybody's worried about the fourth quarter and going into 2012, a slowdown. How is that affecting you?
Well, I think we are seeing semiconductor companies shipping fewer chips than perhaps people expected at the beginning of the year. But actually, ARM volumes are up 25% year-on-year, and as you mentioned, we're seeing very strong demand for the design activity. 28 licenses sold in the last quarter, including new companies. We're seeing our backlog at near record high levels, a very healthy pipeline of opportunities. So we're sticking with the full-year guidance.
Sticking with the full-year guidance, even though we know that some 7% of your sales comes from ST Microelectronics, about 9% from Apple. They both disappointed this week and last.
Well, I mean, some of these things are market share shifts, and when we look across our business at the mix of both royalties, which are generated from shipments and real consumers buying Apple products containing ST chips and those sorts of things, then that's one part of our business. The other part of our business is licensing. And that's about companies doing new designs which will come into products that consumers will be buying in a few years' time.
Now, what sort of revenues are you expecting from the new Cortex A7 chip? That's going into the smaller, cheaper handsets, smartphones.
Well, we launched that product last week, and we are expecting that to be very strong in the sort of 2013 and beyond time period, and it will enable lower cost phones. It will also enable much more power efficient phones. The other thing that we launched last week was A7 used in conjunction with bigger processors to make high-end smartphones much more power efficient.
And why are you going down that road? I mean, you've had such a success with the higher end, the likes of Apple, for so on. How much growth do you see coming from that? I mean, this is presumably the emerging markets that you're targeting.
Well, we see a world where, one day all phones will be what you and I might call smartphones today, and we're going to continue to see high-end phones, and the results we're just talking about, then at the high end, volumes are up a factor of 3 year-on-year. So that growth is still very strong, but we are going to see smarter phones generally over the next 3 or 4 years.
What progress are you making into the PC market?
Well, if you look at the functionality of a PC and the functionality of a smartphone and the functionality of a tablet, then all these things are really very similar. And we saw a couple of months ago Microsoft with their Windows 8 update, and that all appears to be on track. And so when we look at the mobile computing market out a few years, then we're confident that we'll gain about 40% market share.
That's a confident indeed prediction. Some people are predicting the slow and long death of the PC market. You're not, presumably.
Well, we don't get too hung up on individual form factors. We're going to see form factors that exist today continue to grow. We're going to see newer form factors like tablets grow much more strongly. And so when we look at the market as a whole, we can see significant growth there over the next 3, 4, 5 years, and that's where we see an opportunity for ARM to gain market share.
And where else are you going to gain market share from now? Is it globally, or are you actually now targeting those emerging markets when Europe seems to be still in such a big mess?
Well, I mean, we tend to look at the market more by product than by region. And in our non-mobile sector, we've talked about phones so far, but in non-mobile, volumes are up 50% year-on-year as more and more everyday products need to get smarter but energy efficient.
Warren East, always good to talk to you, CEO of ARM Holdings. Thank you very much indeed for coming into Bloomberg today.